world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Ricky Knox. Ricky is the founder and CEO of Tandem, a UK digital bank. It's a fascinating time in digital banking, as tech-forward banks in the UK, US, Europe, and elsewhere race for product and geographic coverage, and players like Apple and Goldman Sachs, who recently announced a credit card partnership, encroach on retail banks' turf. I thoroughly enjoyed this conversation. As you'd expect, Ricky brings a great deal of insight to this topic. If you enjoyed today's episode, please take 30 seconds to leave us a review on Apple Podcasts. Thank you very much for joining us today. Please welcome Ricky Knox. Ricky Knox, welcome to Rebank.
Thank you very much. It's nice to be back.
Yeah, it's good to see you again.
Re-chatting.
Yeah. Maybe you can, to start, update us on some of your recent news and milestones. I think it was a while ago when we last connected. I think in the meantime, you guys raised another $15 million announced, talked about some Asia plans, rolled out some cool new product features. What's been going on?
Yeah. So actually the first two are really one thing, which is we announced a partnership in Hong Kong with Convoy. There's a series of virtual banking licenses being given out in Hong Kong. Actually, the results are due this Friday, but we'll see whether Convoy are in that first batch. Convoy actually have their own banking license already, indirectly through one of their investors. So whether they get the new license or not, we'll be launching over there with them, and we're working through that business planning cycle, which is very exciting. So it'd be good to be, with a bit of luck, the first UK neobank on the ground in Asia. Although I saw that Revolut announced their plans to open in Singapore as well. So I think we'll beat them to it, but we'll see. Yeah,
well, I guess it's worth noting that all of the interest so far from the likes of Monzo and N26 and Revolut has been toward the US, or at least the Americas. I think N26 announced interest in Brazil recently, but no one's really explored Asia. What's the scene over there?
Super interesting. I mean, what you're seeing, so the perspective from this side of the world is often that, Tencent and Alipay are already doing banking. I think Tencent and Alipay are rumored to be getting a license in Hong Kong, which I think they see as their first real banking foray, having spoken to them both about it. Although Tencent has a percentage holding, minority holding in Rebank, it's actually quite a small minority holding, and they don't see that as their own banking venture. So I think both of them see this as an exciting opportunity to enter banking for the first time, where they're already significantly present in payments. In fact, own whatever it is, 90% of payments run around the place in China. So I think there's a perceived notion over here that those markets are very occupied, when in fact I think it's a massive opportunity, and not just in developed Asia, but in developing Asia as well.
So that subject of geographic expansion is kind of one of two legs of a broader point that I want to pick up as we go. But maybe before we do that, some of the new features that you guys have released recently.
Sure. Yeah. So what we're trying to do in all of our feature releases is figure out the things that are going to help our customers most. And one of the big problems that our customers were bringing to us was that they struggle to save. Everyone has, that house deposit or that car or the, less longer term pieces, although people have lots of sort of theoretically I should be saving for a pension, but actually most of our customers aren't quite there yet. But nobody's actually really helping them to put that money aside. So there's plenty of, pots to put things in to, quote, Pooh Bear, but there's nobody helping you put things in the pot. And so Order Savings is a new function that works not just using roundups, which lots of other people are already using, which round up order transactions, which is a really nifty thing, but it's like £9 to £20 per week or whatever it is that you put aside, which is great if you're just getting on the savings ladder and you want to create a habit of saving. But the next stage, where the sort of ladder up stage, which we're focused on as well, we have something called Safe to Save, which is essentially we run a load of machine learning algos over your existing cash flows in your aggregated accounts and calculate how much you can afford to save. We then have another model that basically, first of all, you set a percentage on a slider, and then it will put aside the amount of money that on a weekly basis that correlates to that amount at the end of the month. But then it will also take into account each week your actual spend through the week, and will dynamically adjust the amount that you save. So you're never saving, never putting yourself in risk of going overdrawn. If necessary, even we'll refund money back from your Tandem savings account into your main current account to ensure that doesn't happen. So it's a very intelligent savings tool, and that means that if you're, like a man like you, Will, who has a few £1,000s left over at the end of each month, will actually be able to save a few grand rather than which might head you towards a house deposit one of these days. Sorry, you probably already own your own home.
Nope.
But, whereas roundups is going to get you an extra Mars bar at the end of the month.
Yeah. Well, okay, so that is interesting, a nice innovation, and I like that because it's not something that I immediately see incumbent banks looking to replicate. I think a lot of the stuff that that we've kind of seen early on in terms of what digital challenger banks are doing is stuff that will eventually be kind of incorporated into big bank offerings once they kind of eventually get their acts together. And just, I guess, expanding from there and describing the full product suite. So it's current account following the closing of the Harrods Bank acquisition, which would have been a while ago now, a year plus probably.
Yeah, January 10th last year.
Yeah, and the 2 credit cards now, right?
Yeah, I get 2 different credit cards in the market. Mm-hmm. That's exactly right. Although both those are kind of used for slightly different audiences, but they combine with the app to form a service we call Cash Finder, which again projects your cash flow and gives you a spending money number, which sort of takes out upcoming bills and rent and other things that are going to appear in your financial record going forward, and tells you how much money you actually have left to spend, and then juxtaposes that with your credit card balance, so you don't overspend on the card, and with a whole lot of features that can sort of cap and collar how much you spend.
Mm-hmm. So these 2 legs, right? The kind of geographic reach that we touched on earlier, and then product reach are, I guess, interesting in that they kind of, I guess, shape a lot of my thinking at the moment around what's going on in digital banking, because it seems like we've got different people pursuing different strategies. We mentioned some of the European digital banks who have announced plans to launch in the Americas. We've got the likes of Robinhood and some other U.S. companies that have been successful exploring the European market. So on the one hand, there's a sense of kind of race for geographic coverage, and on the other hand, it feels like there's a convergence of everyone toward a single kind of comprehensive product set. So in different markets, people started with different product hooks. In the U.S., maybe it was investments or i.e. share trading or high interest savings accounts. In Europe, it was FX. In Brazil, I guess it was maybe credit cards, if Nubank is an example there. And over time, you see everyone kind of fleshing out product sets that all kind of move to the same point, which is some combination of banking and investments and planning, generally automated with some sort of budgeting overlay. So there's also that product kind of race to product coverage. You spend a lot of time thinking about this. You talk to a lot of investors. What in your view is the kind of more relevant immediate play? Is it product coverage? Is it geographic coverage? Is it a combination of the 2?
So I've got a nice expression for this, which is next gen banking is eating consumer fintech. I've slightly stolen from Andreessen Horowitz there. And it is going to be the case, in my view, that because it's kind of a word for what you described, which is a bit of the payments, and a bit of card, and a bit of wealth management, a bit of this. It's called a bank, and banks, unfortunately, those are some very diverse activities, but they all sit under a regulatory umbrella, and customers have kind of been trained to look for all these things in one place. And what's more, customers, as I've said on this podcast before, I think are bored by their money. They don't want to spend time with their money. They don't like hanging out with it, and therefore they want a one-stop shop to the extent they can get one. So I think I'm going to come back and answer your question, having just interjected with that piece. But ultimately, I think the answer right now is customers. So it's about customer numbers, and some people are pursuing that with more focus than others. Tandem has gone products at the same time as customers, so we've got quite a broad set. So you didn't mention, we also do mortgages, we do personal loans, we do credit cards, we do fixed term savers, we do instant access savers with auto savings. So we do a real full range of financial services products, as well as third party products that we sell on our platform. So there's a whole load of I don't really like product gets confused because bankers talk about product as this sort of unuseful, passive sort of pots to piss in, and digital guys talk about product as actual services and digital services. We tend to talk about services to describe the whole thing because we're trying to create these new digital services that sit over the old-fashioned financial products. But I would say customers first is a short answer. So I think investors want to see that you have got customer traction. And if you're very purist about it, which somebody, like Monzo has pursued a very purist customer strategy. Now Monzo has a whole load of brand advantages have come through. So they've been slower to move international. I think N26 didn't have quite the same halo, and therefore have sort of made it their stock in trade to move into new markets. Both of those things add up to customers, in my view. I think the international piece is a really interesting one on its own, in that I think the type of global investor who will fund the type of, the sort of levels of capital that are required for some of these businesses will require that you are international. So I think that is a really key part of a strategy for a lot of these businesses. But I slightly group it with the customer bit. And then there's investor mentioned ARPU to me. I'm used to that with telecoms companies, but average revenue per user, or even gross margin per user, which is a metric which some people really haven't been pursuing. But I think over time, people are starting to look for, and certainly I think there's been a drive at Revolut and N26 to start to develop those numbers as well. And that can be done in part by adding product, but actually often it's simpler than just adding more product. And also you can add product that drives customer growth, peer-to-peer payments, for example, but doesn't necessarily add any revenue. Or you can add, which is where you see Monzo go with a lot of their product development, or you can add product, or this makes your customers happier, or you can add product that drives revenue. And those are two different things.
Yeah, I think I definitely tend to agree with you that at this stage in kind of the maturity cycle of digital banking, customer numbers are more important than product reach, because at the end of the day, one, that's what kind of the venture community has been funding and optimizing for, customer acquisition. That they get it, and I think that informs my view to an extent as to this kind of emerging competitive dynamic between European digital banks vying for a presence in the U.S. specifically, potentially massive market. This traditional strategy of we'll test it in a small market and then we'll go launch it in the U.S. once we've proven it. But I think it's really difficult to do if you're up against the likes of Robinhood, who have 4, 5, 6, million customers. Chime has, I think, like 3 million now, right? So I think, isn't it so much easier for Robinhood to build, they've already started introducing bank-like products, to build a more comprehensive, product offering and roll it out to their 5 million customers than it is for a successful European digital bank who doesn't have a US presence to go, round up 5 million customers, regardless of how good their product stack is.
So, first of all, worth mentioning that Robinhood didn't very successfully launch a checking account. In fact, they called it a checking account, and they got slapped around the face by the regulator and told to withdraw their checking account. I'm sure they'll come back and launch it. Robinhood has a great brand halo. I think there is a challenge. However, and I think you'll see in a lot of the models, Acorns coming in, checking account, Venmo trying to issue a checking account. In the U.S., there's an arbitrage where customers small banks under a certain amount of assets can charge like kind of any amount. It's unregulated interchange. So, a lot of the guys charge 2%.
That's the Chime model, right?
That's the Chime model. And my customers, spend, 800 odd pounds a month. So I would be making, 16 quid per customer per month if I had US interchange. Unfortunately, I'm not. I'm making £1.60 per customer per month, or a little bit more than that because it's £2.10 because it's European interchange at 30 basis points on credit card. But so the dynamic there is very different, and so everyone's adding checking because it's both a good source of customer engagement and it's a good source of revenue in the U.S. So I don't think it's quite as simple as everyone becoming a bank. I also think it is harder. So Chime is positioned as a bank, despite not being a bank. It uses U.S. Bancorp behind, or I think it's called the Bancorp now, and there are a number of these platform banks in the U.S. Across the river. There's 4 or 5 of them in total. And they are adding debit card at a rate of knots, but I think it may be more tactical than you think. And I actually think that translating from a free stock trading platform to being someone's main hub is not necessarily an easy transition for them to make. And you may find that, I don't know. I mean, Robinhood has a great brand and a really interesting business, but it may find it's easier for somebody like Chime, where people have come in for a bank, to then serve those customers and grow that base, or even for a new European bank coming in as a bank to really assume that role in people's lives than it would be for a third-party player that was previously a payments business or whatever else it was. We will see. I would say there's a dominant U.S. thesis, which is, Greycroft is one of the investors in Asimo, and I know it's a sort of house view there, which is that these platform banks are going to become the winners in this ecosystem because everyone's a bank. Your mother's a bank, your hair salon's a bank, your telecoms operator's a bank, everyone's a bank. I think that underestimates the regulators' sway, and I think the regulators won't in the same way they slapped Robinhood. They're not going to let your local corner store become a bank, and they're good. There's going to be both a consumer and a regulatory backlash that drives people towards businesses that are at least branded as bank. By the way, it's the only restricted term in the world. So, you want to call yourself a bank, you actually need to be a bank. Hence.
Well, in Champagne, right?
It's a region. Okay, we'll go there.
Okay, well, so firstly, fascinating and great insight. How does all of this fit into Tandem's strategy? So you mentioned focus on customer growth. I think you've got a pretty strong foundation from if we can call them products standpoint.
Yeah.
You're talking about potentially expanding to Asia. How does this conversation?
Yeah, look, we are growing and we are focused on growth at the moment. So that is, we have, we acquired almost as many customers as anybody else in 2018. More than most, and nearly as much as the largest product gainers in the UK. We would like to be by the end of this year significantly more international. So we're acquiring at those kind of rates across multiple jurisdictions, and that's an important part of of our current thinking. I think. We already have product breadth, so we already have better monetization than almost all of our peers at an ARPU level, and therefore, it's a matter of getting that out there and making it sing for more people.
Yeah, you've kind of gotten to the point where the product works and its unit economics positive. So now, how do you scale it?
not just positive, but very positive.
Excellent. Well, I suppose that's no doubt in part linked to the fact that you're, according to Wikipedia, the oldest digital bank in the world, founded in 1893. Which is, of course, Harrods Bank's founding date.
That's good, isn't it? Yeah.
Transferred right across. And I guess a related question, and in the context of this broader conversation, who are, in your eyes, your competitors?
So, look, I mean, there's lots of different ways to come to that question. I mean, broadly, we're taking customers from the incumbents. So those are the guys who I worry, I only worry about competitors to the extent where we meet them in marketing. That's mostly, Barclays and Lloyds and HSBC. But to some extent, Tandem's current product works alongside those. So you call them competitors? I don't know. Definitely the sort of, if you like, the investor, the set that investors would put us in with would be, digital peers, N26, Monzo in the UK. Revolut's on a slightly different banking basis. They're licensed in Lithuania and aren't actually active in that yet. And there are people heading in slightly different directions here. I think you could have said we were all the same thing, when we were all sort of talking about doing something a couple of years ago. But Atom's very much splintered off into its own sort of digital mortgage origination or voice-based mortgage origination with digital savings accounts. Starlink's recently won a very significant award to drive towards SME banking, which is fantastic for them.
And they've done great work on the infrastructure building side.
Yeah, and they've done great work in payments and other stuff. So as well, banking as a service. So look, I mean, I think there's people moving in different directions strategically, but I think it's mostly all to play for at this stage.
You recently announced that you'll use token for open banking in PSD2.
Yeah.
What are the immediate features that you expect that to support?
So token will support both AISP and PISP, so ability to obviously view accounts as well as make payments. We'd already integrated some of those APIs ourselves, and what we discovered was actually it's less different from screen scraping than we thought it was. I.e., the banks change their APIs the whole time, and therefore, to build into them is a very easy job. But then to maintain that requires a team of coders to continue to keep the latest APIs. They have a statutory 2-week period of advance notice they need to give you before they change something, which means basically you need a full-time team of 8 people on these freaking APIs. And we were like, we do not want to spend a whole sprint team's time looking after this. This is what token do. This is their whole business model. I don't know the token history, but they started in the U.S. to create a sort of salt edgy type business in the U.S. that was going to direct integrate into all the banks, and then the banks started turning around and telling they were going to direct integrate with anyone, started kicking out people who were direct integrated, and so they turned to the U.K. where open banking was kicking off, and they'd already built a lot of the tech, so they went and adapted their business model and moved over here. So they're good at this stuff.
Yeah. So the PISP thing, maybe that's the more relevant one because you've been doing account aggregation for a long time, right?
Yeah,
so
exactly.
So what? Okay, is this like just an easier way to fund an account, or presumably this unlocks different?
Well, I mean, in theory, it unlocks the ability to completely shadow control your main bank account. So you can do everything you would have done, or most of the things you would have done in your app via our app.
Is that something you'll pursue?
Yeah, clearly. I mean, that is kind of the point of open banking. It's going to take a little bit of time before consumers adopt it. It'll take a bit of time before it all works properly. But yeah, absolutely, that's our intention.
Yeah, and I guess that kind of brings us to the question of what incumbents are to do in all of this. And I think we've seen some kind of be a bit more proactive. Goldman Sachs in a number of ways with Marcus and other kind of tech related plays and investments. JP Morgan seems to be taking a lot of stuff on the front foot. UK incumbents have been a bit slower, I think, to respond. But I don't know. I kind of have the feeling at the moment that we're starting to shift away from this like early fintech world in which college dropouts in t-shirts hack in garages, to a world in which some of the more powerful innovation starts to come from incumbents. And we started to see some stuff building banks on the side, replicating early fintech product features. I don't know. I think incumbents are. It sounds a bit silly to say this, however many years on, but kind of appreciating that digital is a thing, and starting to meaningfully invest in it. I'd be curious to get your view. Do you agree with my characterization?
Yeah. So I mean, this year was touted as the year of the incumbent response. I certainly haven't noticed it yet in any of my business stats. RBS has come up with Metal, which is a 11FS, one of your rivals here in the podcast world. Piers. Yeah, people can listen to a lot of podcasts, I suppose, kind of like people can use a lot of digital banks. And then I was just reading that in Q3, RBS's sort of retail bit will be ready in it with a focus on marketplace banking, something we all gave up a couple of years ago, but good to know that they're focusing on it now, and enabling customers to switch and save, which it is something we still do. Their target customer base is less financially fortunate and savvy customers of NatWest. I think absolutely the incumbents are doing things and will continue to do things. I think it would be a little bit rude to use the word innovation in the same sentence, but they will. There'll be some interesting stuff. I have no doubt it'll provide fodder for future podcasts, and we can all have a look at the results in a year or two's time and reflect on how impactful they've been.
Yeah.
Marcus is interesting. Marcus has had a big impact in terms of actual numbers of new accounts. Literally hundreds of thousands of new accounts opened in the UK. And in a fixed-term saving market, there is only millions of accounts, so it's not, it's not an enormous market. You couldn't get 20 million accounts because they don't exist in the fixed-term saving market, and put aside hundreds of millions of cheap or expensive capital for Goldman's, which has been helpful for their business because they can deploy that in other areas. But it's not what it describes as innovation. Top of table, internet-based savings account. So how many of those have we got out there at the moment? Well, it's not even mobile-based. It's an internet-based, account. So I think there's definitely going to continue to be. And I like the guys who run Marcus. I met with them the other day. Very smart guys thinking about innovation, but thinking about innovation in their context, in their segment, in really intelligent ways. But we haven't really seen the innovation yet.
Yeah. Well, yeah, I guess to qualify innovation, I think, I don't want to say, well,
Nove in the middle.
Well,
it's new.
I think business model innovation is as important as
Yeah, but come on, everyone's been putting themselves at the top of the tables for an awfully long time. That's not a new thing. High price.
Well, Goldman wasn't a retail bank.
That's
3 years ago.
I see. Yeah. Okay. Good. Yeah. Well, yeah. It was a wealth manager, and it's kind of targeting a slightly lower wealth management segment. So.
Well, and now there's the kind of Apple credit card that they
with their underwriting, which is really interesting as well. I like and that sounds really great. It's obviously your high end U.S. consumer, cashback driven. Those levels of cashback wouldn't work in the European market, but
because of the interchange issue.
Yeah, because it's coming out of a few percent of interchange, But look, sounds like a really cool product. I might get myself one.
You travel enough, I'm sure it'd be worth your while. So to wrap up, long shot, forward-looking question. What is the end state? Well, I won't say end state. It's never over, is it? But what's the kind of intermediate, state of this broader banking market? Right? You've got incumbents who seem to be starting to take steps at making up for lost time. You've got digital banks who are scaling. I don't know. How do you see it playing?
So look, I mean, banking, when you look at it today, okay, huge industry, $2 trillion of revenues or something like that, globally, super fragmented. So, the biggest banks in the world worth $500 billion, so relatively small in the context, mostly focused in one country, even JP Morgan, and Bank of America, two of the largest. Our UK banks are worth a mere $30 billion and are, epoxy and parochial by even the world's local bank is not very local in very many countries. You can't get service as a normal retail customer in most European countries. So you've got a very regionalized banking sector with national champions in the U.S., even town champions, and then some quasi global players that mainly have gone global where they need to for their international corporate clients or for their international wealth clients, but don't really serve retail at a local level. I think what's going to be emerging here is a new category of, and by the way, when I say international, the getting corporate payments together on HSBC has been a very, very long process where, you needed to use different banking systems in different countries, and they've been trying to unify the whole piece. It's been going on forever. It's really, none of this is in any way international in its back end. And I think you're seeing the emergence of some real international players. So what do I think that'll result in? I think the market structure at the end of the day will be the same as you see it in retail today. You'll have some crossover winners who basically decide to invest, completely revamp their own internal IT estate, or successfully launch a flanker brand that they convert all their original customers over into. And those guys will be up there with the winners. And the most likely guys are, frankly, the big guys today, the Bank of Americas, the JP Morgans, the guys who have the heft and are most likely to and to be honest have the will and capability, even BBVAs who are really pushing from the top to drive innovation there. You're going to have those big guys even that get left behind, that just don't quite make that effort, don't quite make the cut, don't renew their cores, don't do the work that needs to be done, and go bust or disappear or get bought by somebody else and fall behind. Definitely happen, and that weeding process has not started. That will start in about 3 to 4 years' time, and you'll see these banks start to disappear, and that will be something that the regulators need to be prepared for. And you'll see the emergence of a category of global challengers that are starting. I think sooner rather than later will be rivaling the biggest banks, and I think we'll see the first of those global challengers hit $1 trillion in market cap within 5 years.
Love it. That is a compelling vision. Ricky Knox, thank you very much for joining us today.
Thanks very much. It's been a pleasure, Will.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.